How do people with irregular income manage their finances? Well, I'm talking about self-employed people, people who get commissions, who get small businessmen, people who have just started out their own business, people with a large component of variable pay. How do they do whatever a salaried person can? This is exactly what this video is going to discuss. Welcome to Fundu Money, your 24 into 7 buddy for all your money matters. In this video, we hope to help you, give you some important tips which will help you achieve everything your friend who's a salaried person can. But for that, you just have to wait a little longer. Self-employed people, small businessmen, startup entrepreneurs, they can exactly end up achieving what a salaried person can. All they have to do is make some minor adjustments in the way they manage money. There are a couple of things that they need to keep in mind while they are managing their money. Now, what are these 3 or 4 important things? In this particular video, we'll just stick to about 3 broad things, and we'll start with emergency funds. Now, this is very important. Emergency fund actually is your rainy day fund or a reserve fund or a contingency fund or your reserve. This is basically needs to be there to take care of emergency. But in case of a self-employed person or a person with irregular income, shall we say, emergency fund actually becomes very important. It just doesn't take care of an emergency, but all your other expenses. So basically what we at Fundu Money would recommend is that you have an emergency fund or a contingency fund or a reserve fund which will cover about 9 to 12 months of your expenses. So what this will do is this will cover your regular living expenses. It will cover some important expenses like premiums, children's school fees that might be coming every quarter. So you need to add that all up and figure out what would be the figure that your family needs in 9 to 12 months. These things become really important if you've just started out a business, or your business is still small, or you're getting payments based on certain sales targets or other targets. This does become very important. Now, you won't be able to accumulate all that money over a period of just overnight. So you need to make an effort to do it over a period of time. So you can sort of every month you can sock away some money and put it in your in a separate bank account or whatever. Or the other smart way of doing it is using a systematic investment plan of a liquid fund. There it sort of takes away, although they're easily accessible, but because you're separating them, putting them in a different place, so you know that that money is really important for your family, and you should not be drawing on that money if you need to go out or on a weekend or something like that. So that's important. So 9 to 12 months, we would say, is something of an emergency fund, which is important. Now, one of the things not to do is to just park it in a savings fund, savings bank account, simply because whatever you say, the interest out there is taxable. There are conditions for it. There's a small little deduction that you get, but apart from that, it's taxable. Second is it really, if it's a large amount, you might deploy it somewhere where you can get that little bit extra, which say a liquid fund or a slightly higher interest bearing FD could get you. So you should not let that money vegetate or stagnate in a savings account. Most of the places still have a 4% kind of interest rate. Some offer a little higher, but remember, that's all taxable, as I just mentioned. So you basically need to have most of that money in a slightly higher earning avenue or an option. We quite like liquid funds. You could look at a slightly shorter debt fund, shorter term debt fund. Just keep in the amount that you need next month in your savings account and keep drawing from that as if it's a a pool from where you're drawing some water, and that water needs to take care of your immediate need. So that's number one, which is emergency fund. You need a large amount, and that is to smoothen up to match your expenses, so you're taking care of that. So what happens is then you don't drop on your longer term investments. So that's number one. Number two is which is again deals with things that protect you, which is insurance. So a person with irregular income should not be rushing into investments first. First, that person needs to be taking care of emergency funds. Why emergency funds? Number one, because even these are the kind of things which no insurance policy would cover. So you're basically doing that, and plus expenses. Next is you're securing your family, so therefore you need to go for insurance. Now all of these items need to be covered: your life, your health, your income, which is the threat can come from an accident, your home. All of them need to get covered. Now you need to smartly shop around. Like in life insurance, you basically need to go for a term plan. Try to go online. The premiums might be lower. If you're young, just buy it right away, so that you enjoy that low premium for the rest of the term. So basically the idea is this, that if something were to go wrong, say with your health or anything like that, you don't draw up on the emergency fund or the reserve that you've kept, or neither do you touch upon any investments that you're making for the long term. So now that with insurance and emergency fund you've secured your family, now that the whole focus needs to go towards making investments for your future needs. It could be for your child's higher education, your retirement, buying a home, what have you. Now, a favorite excuse, or shall I say a favorite a common myth which a lot of self-employed people have, is that we don't earn enough, or we don't earn a regular income, and therefore we cannot save regularly. Nothing could be further than the truth. What you need to do, or what you need to realize, is that even if there are small amounts you need to invest, what small amounts can do over a large period of time is simply amazing. The power of compounding, about which there will be enormous number of videos and literature out there in the internet, etc., even on our website, will tell you that even as small amounts invested over large periods of time, a long period of time, will end up giving you substantial amount of savings. So never underestimate what even 500 rupees a month can do. That is exactly what you can do when you invest in an equity fund through systematic investment plan, SIPs. And of course, the equity fund has to be having a good track record, and there are various other details that you need to look. We have mentioned this in our channel. You can check out the videos. But you need to invest in growth, and you don't need to invest big. So even you can start with 500 rupees. You can keep investing every month, and get comfortable about it. And as your income increases, you can increase that amount. So what you'll be eventually surprised how much you save. Now, each one of these systematic investment plans has to be earmarked. You could have a couple of investments, small investment, one of them earmarked for a child's higher education or any other need. So you can have these bunches earmarked, or combinations earmarked for your specific needs. So this is something that you could do. The other nearer term requirements can be met with this kind of putting money together can be done through recurring deposits. You want to actually pay a annual premium, although you can pay premiums on a monthly basis, but you want to pay an annual premium, you can actually do that. You can have invest regularly in a recurring deposit, and say at the end of a year or whatever, that money you can use to pay premium. So it's not as if you really it's there's no hard and fast rule or requirement that you should be having a regular income for you to achieve some of these goals or invest regularly, you can actually do with small amounts of money. So but the sequence has to be right. You first have to secure your family. Make sure that your investments don't get threatened, because if you haven't secured your family, then you will be drawing on your investment. So first you need to do everything you can to secure your family through an emergency fund and the various insurance policies that we talked of, and then look at investments. How did you find this whole discussion? Did we miss out something? Well, you can always plug in at the comment section. Do take a look at the description section. There'll be useful links and information out there. Use the closed caption feature of this video so that you get to get the highlights of this discussion. Do stay connected with us on all leading social media platforms, and of course visit our website www.fundomoney.com.